Okay.
I was attending a business seminar yesterday. They are keep talking about SMEs. Can you explain about it?
Of course, I love to explain about it. SMEs or small and medium enterprises are a big deal in Malaysia. Do you know that they are the heartbeat for our economy?
The heartbeat?
Yes.
That's quite a claim. Can't you explain about it?
Well, of course. Let me explain about it.
SME stands for Small and Mid-sized Enterprises, which are businesses that maintain revenues, assets, or a number of employees below a certain threshold. SMEs are defined by specific criteria set by the Malaysian government, and they cover a vast range of businesses. They contribute massively to our GDP and provide countless jobs. For our country, Malaysia, SMEs can be defined by two factors, which are sales turnover and number of full-time employees. And there are two sectors in our country. First, manufacturing sector. For manufacturing sector, small enterprises have a sales turnover between 300,000 and less than 15 million, or they employ between 5 to 75 full-time workers. While medium enterprises in this sector have a sales turnover between 15 to not exceeding 50 million, or they employ between 75 to 200 workers. In services and other sectors, a small enterprise has a sales with turnover between 300,000 and less than 3 million, or employs between 5 to 30 full-time workers. Medium enterprises here have sales turnover between 3 million to not exceeding 20 million, or they employ between 30 to 75 workers.
Rina.
How are you doing?
Actually, I'm applying for the new loan for my new equipment.
So how's it going?
It's not going well. The bank is giving me a hard time.
How come? I see that your business are doing so well.
It is, but they are not happy with my credit history.
That makes sense. Banks are pretty strict about that.
Yeah, that's right. The poor credit history is a major hurdle for many Malaysian SMEs trying to get bank loans approved.
I see.
Yeah. Hi everyone and welcome back to the channel. So today we are talking about a common challenge faced by many Malaysian small and medium enterprises or SMEs to get that crucial bank loan. Access to financing is important for SMEs to grow and thrive, but for some, a harder stands in their way, which is poor credit history. Let's dive into why a bad credit score can make loan applications a struggle. As we all must know, banks assess creditworthiness based on past borrowing behavior. For example, a history of late payments, defaults, or even bankruptcy raises red flags for the company itself. They see these businesses as a higher risk and less likely to repay the loan. So you guys must think that no credit history, no loan, right? Even though for new SMEs often have no credit history at all. This lack of data makes it difficult for banks to assess their risk profile. Without a proven track record, securing financing becomes even more challenging. So what can an SME with poor history can do? An SME must be focusing on building a strong credit history is the key. Start by obtaining smaller loans and repaying them diligently. It can maintain accurate financial records and develop realistic projections to demonstrate their business health. By showing commitment to responsible borrowing, you can gradually build trust with the lenders. But do not limit yourself to the banks. You can explore alternative financing options like venture capitalists, angel investor, or even government grants. By building strong relationships with financial institutions can also help create trust and open doors in the future.
So, why do SMEs struggle to get loan approval? It is because of their lack of collateral. So, let me tell you about it. One of the common reasons why some Malaysian SMEs struggle to get loan approved is because of the lack of collateral. Many banks demand SMEs to provide collateral to secure loans in case of a bankruptcy. What is collateral? Collateral is something provided to a lender as a guarantee of repayment. Any valuable personal or company property may be used as an extra source to pay back the loan. Collateral requirements can be strict as bank usually prefers real estate or large physical assets to be the collateral. As new enterprises are unlikely to have collateral to back up their loans, sometimes they must use their personal assets as collateral, which is too risky. Bear in mind that without a proper collateral, SMEs can be considered too risky for loan approval. Let me give you an example. Chan Enterprise is a new small firm in Kuala Lumpur that produces sustainable packaging for local foods, vendors and sellers. As a new company, they are working from a rented place and have limited tangible assets, generally goods and basic production equipment, which are insufficient to meet the bank's standard collateral requirements. As a result, the owner of Chan Enterprise will take the initiative to put out their personal assets, such as their houses or personal savings, as an assurance to get a loan. This is a risky activity, especially given the unstable business. Due to their lack of valuable physical assets and a limited financial history, their loan applications are mostly to get rejected, forcing Chan Enterprise to seek alternative financing options to support their growth and operations.
Now, let's move to the next point. Many small and medium enterprises, SMEs, face challenges when applying for loans due to inadequate evidence of strong cash flow. Now, let's move to the next point. Many small and medium enterprises, SMEs, face challenges when applying for loans due to inadequate evidence of strong cash flow. Now, let's move to the next point. Many small and medium enterprises, SMEs, face challenges when applying for loans due to inadequate evidence of strong cash flow. Now, let's move to the next point. Many small and medium enterprises, SMEs, face challenges when applying for loans due to inadequate evidence of strong cash flow. Now, let's move to the next point. Many small and medium enterprises, SMEs, face challenges when applying for loans due to inadequate evidence of strong cash flow. Now, let's move to the next point. Many small and medium enterprises, SMEs, face challenges when applying for loans due to inadequate evidence of strong cash flow. Now, let's move to the next point. Many small and medium enterprises, SMEs, face challenges when applying for loans due to inadequate evidence of strong cash flow. Now, let's move to the next point. Many small and medium enterprises, SMEs, face challenges when applying for loans due to inadequate evidence of strong cash flow. Now, let's move to the next point. Many small and medium enterprises, SMEs, face challenges when applying for loans due to inadequate evidence of strong cash flow. Now, let's move to the next point. Many small and medium enterprises, SMEs, face challenges when applying. Financial institutions require detailed and accurate financial documentation to assess loan application effectively. Despite being profitable, SMEs often struggle to maintain comprehensive financial records. This difficulty stems from the operational reality where SMEs frequently pay third-party suppliers upfront for goods and services but might not receive payments from their own clients until later, causing cash flow discrepancies. These discrepancies can lead to incomplete or poorly maintained financial records, which are critical for lenders to evaluate an SME's financial health and repayment capacity. Financial institutions require detailed and accurate financial documentation to assess loan application effectively. Despite being lenders heavily rely on such record to gauge risks and make lending decisions. Inconsistent or insufficient documentation can undermine an SME's credibility and increase the likelihood of loan application rejection. To improve the chances of securing loans, SME must prioritize meticulous financial record keeping by implementing rigorous accounting practices and ensuring timely updates of financial records. SME can enhance transparency and demonstrate their financial stability to lenders. This proactive approach not only increases the likelihood of loan approval but also supports sustainable growth and resilience in challenging economic environments. To improve the chances of securing loans, SME must prioritize meticulous financial record keeping by implementing rigorous accounting practices and ensuring timely updates of financial records. SME can enhance transparency and demonstrate their financial stability to lenders. This proactive approach not only increases the likelihood of loan approval, but also supports sustainable growth and resilience in challenging economic environments.
Now, what are the measurements that can be taken by the government to mitigate the coming economic slowdown in SMEs?
Well, there are three measures that the government can help with. First is Financial Assistance Program. Financial Assistance Program is a program made by the government whose purpose is to help the small or medium entities pay their employees to continue operations, avoid the loss of jobs and income streams under certain conditions. For example, in the year of 2020, where the decline of small and medium entities is at its worst because of COVID, the government introduced a financial assistance program named Wage Subsidy Program, which helps in easing the financial burden of SMEs altogether, under the conditions that the SMEs can only apply if their earnings decrease by 50% totally. Second, the government can help the SMEs by tax deduction. For example, tax relief for SMEs according to the year of 2024, such as startup SMEs tax rebate, where the newly startup small or medium entities can claim this tax relief to help with their capital and lessen the burden of operating costs of the SMEs. As for the current SMEs, they can claim SME special deduction tax relief for the SMEs that use ultimate business expenditure and claim 30% of the qualifying expenditure. This also helps encouraging the SMEs to invest in technology. Besides that, the tax deduction can also help the SMEs in other ways by increasing the demand in market. Lastly, government can also help the SMEs by doing a campaign. For example, a campaign for enhancing the performance of the SMEs. The main purpose of the campaign is to improve their skills and knowledge about business management so that they can stand beside the other SMEs strongly, even with such intense competitiveness. With the correct and access to such knowledge, such as knowledge about technology skill, way of promoting effectively using social media, product branding, protection of intellectual property rights, and many more, SMEs can penetrate world market even in rural industries.
So, that's all from us.
Thank you! Bye!